Let's head to Victoria. Ernie, go ahead, please.
Yeah, good morning. I like your opinion on Bank of America. And if you please could give me the street consensus. Thank you very much.
No problem. Thanks for calling, Ernie. Bank of America. Now, I know your top picks include one big U.S. financial. We'll keep them in suspense.
Yeah. So, Ernie, we've used Bank of America a few times over the last 6 months as our top pick. If I had to pick one bank in the U.S., probably this is it. It's very domestically focused. We like the improvement going on in the U.S. economy. They are an enormous beneficiary of rising interest rates. So to put a point on that, in the most recent quarter, we had one short-term interest rate increase. Bank of America had an additional $600 million of earnings from one interest rate increase. That annualizes to $2.5 billion. We know that we should expect several interest rate increases over the next few years.
Okay.
And so I'm very bullish on Bank of America. The business conditions are improving, and the Bank of America trades at just over 1 times book value.
So that's cheap for a financial.
U.S. banks have traded at 3.5 to 4 times books for extended number of years at a time.
3.5 to 4, eh?
So that's without any growth in book value, but Bank of America is growing its book value greater than 16%. So you're going to get dividend growth, you're going to get earnings growth, you're going to get multiple expansion. I think this probably has 5 to 6 years in front of it. So this would be a core holding for us, one of our largest 10 holdings, and I think you can buy it right in here.
No problem. Let's head to Belleville, Ontario. Ron, go ahead, please.
Yes, I'd like to ask Mr. Burrows if he could give me his analysis on Shopify.
Right. So, look, we have sort of 5 key themes we're focused on. One of them is financials, one of them is technology, and of course Shopify puts the two of those together. Shopify really is financial technology. It's the platform that small and medium-sized internet retailers are using to sell their products. So they're an enabler of internet commerce, and Shopify is growing very rapidly. We own the stock. We have a fair-sized position and have had since it went public, and I would continue to buy the stock here. So in the very near term, it appears the market is slightly more favoring value than growth. This is more growthy, so it's been very strong over the last month. You know, you're going to have corrections, but I think you can buy the stock here, and I think that it's going to participate in the market that we're in.
It's almost like a mini Amazon, I suppose.
Absolutely, it is. But probably even better, they have a very strong position with their customers who are generally too small to have an alternative or to have really any negotiating power.
I love that thing Tobias Lutke had to say, the boss of the company, that we too often let our tech companies in Canada just be taken over instead of building global giants ourselves.
That's right. It's a highly, highly successful company. They're doing a great job.
Thanks for that question, Ron. James in Toronto, go ahead. I'm not hearing James. Could be my old ears.
Sorry.
Go
Hi.
ahead, James.
I would like Mr. Burrows' analysis of IBM, and Andy, can I have the street consensus, please?
You got it. Thanks very much.
So, James, there's lots that's working in large cap technology. We've used Microsoft as a top pick over the last while for lots of reasons. You're seeing acceleration and growth in a bunch of their franchises. The difficulty that I have with IBM is they really are having a hard time growing. So I'm less interested in IBM. The stock's acting well, and certainly it's participating. Large cap tech, one of the key attributes is that they do have an ability to grow what they're paying people. But I would prefer to look at a Microsoft than an IBM.
Why would you pick Microsoft in this case?
Well, look, you've got close to 100% growth in their cloud-based business, so they are the competition to Amazon, and with real strengths. They have the software as a service, Microsoft 365, which is growing very rapidly. So this recurring revenue is becoming a very significant piece of their earnings and cash flow, and they've just had a tremendous ability to grow their dividend. Now, you know, current management is much better respected than Steve Ballmer was. And so everybody's working hard and pulling in the same direction. You've got the engineering side that respects them. You've got the marketing side that respects them. And this company's a bit of a juggernaut. So it's a great core holding.
And IBM, the consensus, the analysts are a little wary. There's 7 buys, there's 19 holds, there's 3 sells. Average target 165, and the stock, as we just saw, is around $180. Richard in Lethbridge, go ahead, please.
Well, thank you for taking my call.
Pleasure.
I sure appreciate your optimism in the market and your introduction. Nvidia, it's a confusing stock to me. I'm not understanding its fluctuation. It was down to 106. It's up to $110. It goes back and forth. Is that a safe company to get involved in? I'd like to get your opinion on that one. Thank you very much.
So, Richard, Nvidia was a top pick of ours about a year ago. It's been one of our best performing positions over the last year. So let's take the lens back. First of all, we really like semiconductors as a group, technology as a whole, because there is secular growth. Secular growth meaning there's a change taking place in industry that will go on for a long time. Nvidia is in the absolute forefront of what's happening with things like self-driving and AI.
Oh.
Okay, so
they're not just video game
no.
chips,
They've made the leap. So they are really the core in AI
for
today.
processing images, I guess.
That's
yeah,
right.
Yeah.
So listen, it's an expensive stock, no question. The problem is in technology, if it's good, it should be expensive. If it's cheap, there's probably something wrong, okay? So this is sort of the leading semiconductor stock as a way to participate in some of these, really massive tectonic shifts in technology. So it's going to be volatile. It's going to move around, right? When it reports earnings, it's got to continue to show the strength that it's had. So, as most people should, we take a basket approach. We own a number of different semiconductor companies. It's a higher risk position, but I think it's right in the sweet spot, and I think it's one that you can own. Just identify where you would say uncle if it started to go wrong on you. We always use stops on all of our positions. But stops are great because it lets you stay in the ones that work as long as they work. You just keep ratcheting the stops up in behind them. So I like the stock and I'd buy it here.
That's an interesting angle. I had no idea. I thought it was just about video games.
No.
Yeah, I guess these self-driving cars, they'll be able to see. They need to see what's ahead of them, yeah. We're going to be back with David Burrows of Barometer Capital Management. He's answering your questions on North American large caps. The number 1-855-326-6266.